Hey everyone, it's Mike here and welcome back to my channel. I'm so glad you could join me for today's video where I'll be talking about the importance of order flow delta. Now, before we jump in, if you enjoy learning from these videos, don't forget to subscribe and click the notification bell so you never miss a new upload. And if you find today's video helpful, be sure to hit the like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback. I go through the comments and sometimes I make videos based off those comments. Your support really does go a long way in helping me create more content just like this. So if you're getting value from my channel and you want to see more, be sure to subscribe and let's grow together. Now let's go ahead and get started with today's topic. All right, let's get into it. So, today is Monday, August 21st, and the S&Ps, we opened up, then rallied up to new highs and had about a 30-point sell-off. And, really what I want to discuss is, sort of what were some of the clues in the order flow to give traders some signs that the market was about to sell off. And cash opened here at 8:30 Chicago time. I got a comment from somebody who says, "What does that mean, cash open?" Really, what futures are open. Basically 23 hours a day. They close from during the week they close from 4 o'clock Central Time till 5 o'clock where they reopen. But when I refer to the cash hours, obviously that's when the underlying stock market is open in the US. So we opened up, went up, came back, that pulled back, and then we rallied up to new highs, and then we proceeded to sell off quite sharply. And there was a comment on a video basically saying that delta is useless, and honestly I really disagree with that. For me, delta is one of the building blocks of order flow, right? You need to understand delta and how it's coming in, not just a bar's delta by itself, right? If you're just trying to analyze a bar's delta by itself, well, every bar has delta. It's going to be positive or negative, more or less. There is times where it just comes in at exactly zero, but that's just more coincidence than anything else. And with delta, especially in the E-mini S&Ps, I find that I have a certain range as well. So if it's plus or minus 50, I sort of treat that as a neutral zone in terms of, it could have easily been positive or negative based off of one more trade. If I'm looking at a time-based chart, it just closes right after 60 seconds, right? If I'm looking at a 1-minute chart. So sometimes if I see like a delta of -3, I know that if there's just one more trade, it could have been positive. So I just kind of treat it as neutral. I don't say, oh, it was -3, it's a negative delta, right? You got to put it in context of the market. And it's especially true in understanding where that negative delta comes in or where that positive delta comes in. So let's just go back to the open here, right? We opened up, we opened up basically around the 93 area, rallied all the way up to 05. So about 10, 12-point rally. Pulled back a bit, back down to, basically right around the opening price, and then shot up to new highs. Okay, now at this new high, anytime we're trading around a high or the low of the day, this is where understanding delta really comes into the forefront, right? You want to understand what is happening in terms of the aggressive buying and the aggressive selling in the market, right? And delta obviously is, just to recap for those that are new to order flow, is the difference between aggressive buyers and aggressive sellers in a bar. The next question is going to be, what's an aggressive buyer, what's an aggressive seller? Well, there's 4 types of traders. Basically, you have aggressive buyers, aggressive sellers, you have passive buyers, passive sellers. People that work and bid or work and offer are the passive traders. The aggressive traders are the ones that buy from the passive seller, and the aggressive seller is the one that sells to a passive buyer. So when you see negative delta, it's telling you that you had more aggressive selling in the bar than aggressive buying. If you see positive delta, then you had more aggressive buying than aggressive selling. Okay, so within delta, you have a bunch of different numbers you could look at, right? So the main ones that I concentrate on is obviously the final delta, just the delta for the bar, the max delta, the min delta, okay? Then that's sort of what we'll be discussing today. Now, max delta tells you how strong delta was in a bar, the strongest it was. Min delta shows you how strong negative delta was in a bar. So I see up at this high, I got a max delta of 623. I've got a min delta of minus 279. So I know at one point in this bar, there was some decent aggressive buying. It was positive delta of 623. And also in this bar, the aggressive selling was minus 279. So why is this important? Well, again, if I'm at a high of the day, in this case today, I'm at the high of the day, I'm looking at this high, I'm not only going to look at the final delta of minus 212, right? I mean, we're at the high of the day, you have aggressive selling come in, that's your first clue that, hey, you know what, maybe this market can sell off. And I take it a step further, I look at the max delta and the min delta, and I see that in this bar, at one point, there was some strong aggressive buying of 623 in the max delta. So early on in this bar, there was aggressive buying. We're up at this high, and we still have the aggressive buying, right? That's what you expect to see at new highs, right? You want to see aggressive buying. So not only did you have that aggressive buying, but it shifted from strong aggressive buying to aggressive selling, right? We closed at minus 212 in the delta. So this delta, it was plus 623 early on in the bar. Then the aggressive selling came in over the remainder of the bar and took the delta from positive 623 back down to 0 to sort of neutral in terms of the delta in the order flow, and then continued on into negative territory, minus 279. And finally, the bar closed with minus 212 in the delta. Okay, so that's, that's a bearish sign. So we're at the new highs of the day, and you have bearish order flow coming in. Okay, but that's just one part of the puzzle, right? It doesn't mean you're automatically going to get short. Now, when you start adding in, other pieces of the order flow, right, we see a stack selling a balance coming in here. The 126 against 15, 92 against 1, 182 against 37. Okay, yeah, I also have a thin print in here of one contract. Okay, so now we have, the negative delta at the high. We've got aggressive selling in sense of a stack selling a balance, and you got a little bit of momentum coming in here to the, bearish momentum with the thin volumes towards the bottom of the bar, 15, 137. Then what happens? Market next bar opens, goes inside. Not exactly the most bearish bar that you'd want to see. What you'd want to see is the market start to come off a bit, right? Start trading lower than this bar that we made the high in. Okay, but you still want to give it, another minute or so, right? You just want to abandon this right away. And then the next bar comes in, you've got a red candle down. Okay, technically it's an engulfing bar previous to this green candle here. But again, not necessarily such a big engulfing. It's one tick above the high of the bar, one tick below the low. One selling and balance in there. Okay, nothing to get excited about. But the delta is minus 227. Okay, now the max delta was positive 143, the min delta was minus 233, and the final delta is closing at minus 227. So it's closing, this bar is closing right near our min delta number, which again is a sign of bearish information. Okay, but again, we had bearish order flow here and it just went sideways. Still, let the market tell you what's happening. Then finally, this red bar down, we break away to the downside from the high. A nice strong negative delta, minus 431. Again, it's closing near our min delta number of minus 438. That's why this is magenta, just like the 227 was magenta. Look at the max delta, it's 58. So not a lot of, there was aggressive buying, but when the aggressive buyers were in control, it was quite small. It was just 58. So what's happened since we've hit the high? Well, we're at negative delta minus 212, one bar with positive delta of 270, negative delta minus 227, negative delta minus 431. We're starting to move away from the high, right? Aggressive sellers are starting to take control of this market. Okay, maybe you're still not convinced yet. Maybe you still need more convincing. Okay, get another red candle down here, right? This time, the high came in at 8.5. Now we're trading, 0.3. Now you got two selling balances. Again, a nice strong negative delta, minus 514. The max delta was only 8. So when aggressive buyers were in control of this bar, they only managed to take control by 8 contracts. Min delta is minus 702, which is quite strong, and we're closing at minus 514, so still a strong number. By this point, you should really be thinking that this market's going to move lower rather than reverse and come back up. Now, of course, obviously, if we start putting in, positive delta in the next bar, yeah, you can expect the market to potentially move back up. Okay, then finally, more red candle, negative delta, negative delta, negative delta, single print, stack selling imbalance. You got a 2 in here, so thin volumes coming in. But really, the signs were coming in here earlier, 1 bar, 2 bars, 3 bars, 3 out of 4, very negative. That's your sign that potentially this market can sell off. Now, I wasn't expecting it to really drop about 30 points. It got all the way down to, pretty quick down here to, 86, even down to 84. Again, this yellow line is the opening price from last night. But I was looking for, at least a pretty quick, 10-point sell-off. It extended another 10 points. But this is, the importance of delta, right? Understanding delta, not just on a bar basis. Oh, it's got negative delta. What does that mean? You start putting it together, right? You're at your high of the day. Negative delta, one positive, then negative, 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 negative. There's selling coming in here. I mean, obviously, red bar. You got selling imbalances. You got stack selling imbalances as well. You've got thin prints in there. It's just, signs there for you in the order flow. Now, people are going to say, well, we're going into the high on positive delta. Shouldn't we have gone higher? Well, yeah, we did go higher, right? We made a new high, but it all shifted in this bar. The strong positive delta of 623 ended up at just minus 212. And again, anytime you're at the highs of the day going into the high, you're expecting to see positive delta, right? This is nothing out of the ordinary. 339, 393, 252, 291, 700. That's what trading into the highs looks like. But when you start coming off from highs, this is what it looks like. It looks like negative delta, a positive, negative, negative. It's just consistent negative delta, right? All the way down. But you don't need to have 10 bars of negative delta. You don't need the market to move 10 points, before you realize, oh, this is the high. You could pick up the signs early in the delta, right? That's the power of order flow, is it's cluing you in to what's happening right now in the market, right? Order flow is the market. It's not a trading strategy by itself where you're like, oh, okay, just tell me where to buy and sell, right? No, you want to do the analysis, right? And it's not brain surgery type analysis, right? You just say, oh, we're at the high of the day, I got negative delta. Let's see what's going to happen. Oh, okay, I got a bar with positive delta, and it's just inside, right? No direction yet because it's just inside of the bar on the high. The next bar, technically it's inside of the bar on the high, but it's kind of an engulfing pattern, but you're back down to negative delta. Again, I'm still not convinced by this third bar, but once it starts breaking here, that's your go sign to be looking to get short in here in this bar around, maybe 02 to 03 area for the market to sell off. So that wraps up, today's video on the importance of delta, right? So I hope you found these tips helpful for your understanding of order flow. Again, I make these, I'm not trying to say this is the strategy you have to trade, because the market is unique, right? You don't get carbon copy setups exactly the same every time, but if you look at the charts long enough, you start to understand that what you're seeing is the aggressive selling coming into the market. So let me know what you'd like to discuss, what you'd like me to discuss next by leaving a comment below. So if you enjoyed this video, be sure to hit the like button and subscribe to the channel so you don't miss, my next video. So thanks again for watching and being a part of this community. I do appreciate your support. I do appreciate you taking the time to write me a comment. Like I said, I've been a little bit more proactive in trying to get back to people on their comments. So I'll see you guys in the next video. So keep at it, guys. Bye-bye.